Okay, hi everyone. Hello. Okay, I still see people. Um, Hi Lois. Hi Ryan. Hi Samantha. Hi Cleon. Welcome back. Dean, I see the attendance list moving. Let me just enable this. If you guys can hear me loud and clear, if you can see my screen, please say something in the chat box so that I know I'm not talking to myself. Can you guys hear me loud and clear? Okay, thank you, Dean. Thank you, Brian. Thank you. Hello, Phoebe. Hello. Oh, Phoebe. Okay, chat box is working. Everyone can hear me loud and clear. I think we're good to start today's webinar. Give me a sec. I see new names here today. Can you guys let me know where you're from? I am currently based in Singapore, by the way. I am doing this call from Singapore. I just want to know where the rest of you are from. I know some of you are from Singapore as well, but I see different names here today. Oh, South Africa. Okay, hello, welcome. Australia. Okay. Okay, cool. Hi everyone. Welcome to today's webinar brought to you by IronFX. I am really excited to have you guys here. Whether you're a complete beginner or you're a seasoned trader looking to just, see what another trader has to say. I welcome you to today's webinar. I hope that today's webinar will be insightful and valuable to you. So before we dive in, I'd like to get... Hi, hello. Hi, George. Hi. Okay, I'd like to get to know you guys. I mean, I see here some of you saying you're from South Africa. I know some of you are from Singapore. The rest of you, don't be shy. I do want to make these webinars a little bit more interactive. So do not be shy. Let me know where you're from, how long you've been trading. Namibia, Africa. Yep. Hello. Welcome. And how has trading been for you? Okay, don't be shy. Just let me know in the chat box. So, as usual, this webinar, before we start, I do need to do a disclaimer. This webinar is purely intended for educational purposes. Everything I share with you today, from strategies and tools, is meant to help you understand the markets better. It is not financial advice and should not be treated as a recommendation to buy or sell any specific assets. Trading involves substantial risk, and it's important to remember that past performance does not guarantee future results. Please make sure you fully understand the risk involved before engaging in any form of trading, and only trade with capital you can afford to lose. Okay, so I'm a newbie gold trader from Philippines. Hello, Dean. Hello from the Philippines. I used to live in the Philippines for like a few months. Okay. Cool. So before we dive in, let's take a moment to um get to know each other. My name is Cassandra. For those who are here for the first time, you can call me Cass. For the rest of you who have been here for multiple times, you already know me. I am an investment analyst at Rocket and also a prop trader. So at Rocket, we specialize in Forex and equity research, and we've been recognized as one of the top research firms for several years running. Give me a moment, guys. Just give me a moment. I want to make sure I'm on the correct slide. Okay, yeah, I'm on the correct side. Okay, so our team is highly trained in trading and investment. We don't just follow the markets, we study them deeply, we conduct rigorous research, back testing, and data analysis, and we often write the very material that other analysts across the region rely on. So as for me, I actively trade as a prop trader and have successfully passed multiple prop firm evaluations. For those who don't know what these are, it's basically tests that a trader would need to take to get funded. You basically need to do 10% in profits to get funded. I've done this multiple times. 10% within a month, okay? 30 in 30 days. So you know how in the 1 month there's only 22 trading days. So yeah, in 22 trading days, you need to do a profit of 10%. So I've done that multiple times. I'm sharing this so that you guys know that you are in good hands. Hello, Jamilu, welcome. Fancy seeing you everywhere. I'm sharing this so that you guys know that you are in good hands. I also specialize in technical analysis. So if you have anything to ask me about technical analysis, do not be shy. Anything at all you want to ask me about trading, you can just ask me. You don't need to be shy because the whole point of this webinar is to help you guys improve in trading. So if you're not asking questions that you're unsure of, then I cannot help you answer them if you're not asking. Okay, so don't be shy, just ask. I won't mention your name or whatnot if you're shy. Okay, so let's get into it. Our webinar for today is going to be, we're going to talk about breaking news, and I'll show you how news impacts the market, what to look out for, and how to avoid getting trapped by volatility. After that, we'll dive into setups in trading. This is where we'll walk through how I personally identify trade setups, whether it's based on price action, structure, or using tools that help filter the noise. If you're someone who struggles with knowing when to enter, exit, this part is going to be useful to you. Okay, so again, do not be shy. Ask questions if you don't know what is happening and it's unclear. So before we jump in, another reminder again, I do need to constantly remind you guys that everything I'm sharing with you guys today is purely educational only. Okay, it is educational. It's intended with educational purposes only. Nothing here should be taken as financial advice. Whatever I share with you guys is purely my own trading style. Every trader trades differently. Just because I am profitable doesn't mean my way is the only way that works. There are other traders who trade differently and it also works. Okay, I'm merely sharing how I do it, and I hope you guys can, I don't know, implement it to your style of trading or whatever it is. Okay, so the agenda for today is to trade the market live with a professional trader. Key fundamentals to watch out for this week: identify high probability trading setups, request for research on any instrument you're trading, and join a community of traders working together to trade the markets profitably. Cool. So breaking news. To find out more about breaking news, you guys know how this works. I'm gonna go very fast on the breaking news because I know you guys would want to spend more time on the charts. I personally want to spend more time on the charts as well because there's no point talking so much if you're not really doing the exercises on the charts. You're not really, putting in the work. Okay, so hello, those who just joined. I see the attendance list moving. Okay, so economic calendar is where you go and look for when certain news is coming out on certain dates and whatnot. So please go and find an economic calendar that you can follow. There's one on TradingView, there's a lot of free economic calendars, honestly. You just need to follow them, and then you need to follow the currency or pair that you are trading. So for example, if you are trading US dollars, these are the ones that you should be looking out for, which is FOMC, NFP, CPI data, PPI data, ISM, S&P global reports, and whatnot. So this is very heavy on the US dollar. On top of that, you want to look at employment changes, retail sales, purchasing manager index, reports, and gross GDP, CPI, as FOMC meetings. Okay, so these are some of the things that you want to look out for. I'm just going to talk a little bit about what news I do see today that I was keeping my eye on. Okay, so I'm only going to talk about two currency pairs. The first one will be the euro, and then the second one will be the US dollars. So for euro, the ECB rate cut, the European Central Bank is expected to cut interest rates by 25 basis points to 2% today, making it eight consecutive cut. This move aims to support the Eurozone economy as inflation falls below the ECB's 2% target. So market reaction, despite the anticipated rate cut, the euro has held steady against the dollar, trading slightly above 1.1400. So, I mean, if we're looking at this news, it's kind of saying that EUR, the euro, is kind of bullish. Okay, so the ECB's forward guidance will be crucial. If President Christine Lagarde signals a pause in rate cuts, the euro may strengthen. Conversely, hints at continued easing could exert downward pressure on the currency. So currently, I am a little bit more bullish on EUR, not just fundamentally, not just news-wise. Even when I'm talking about technical analysis, I am also bullish on EUR. Okay. So we're gonna look at EUR USD in a while. The next pair we're gonna look at is the next currency we're gonna talk about is the US dollar. So the economic data on the US dollar is that recent US data shows initial jobless claims at 240,000, indicating a softening labor market. And the market reaction to that is that the dollar has weakened due to this economic indicators, with the USD index falling more than 0.4% on Wednesday. Okay, so the outlook for this is that investors are now pricing in a 95% chance of Federal Reserve rate cut by September, which could further weaken the US dollar. So basically, the summary for EUR and USD would be that the pair is currently influenced by contrasting monetary policies, the ECB's potential rate cut, and the Fed's anticipated easing. The euro's performance will hinge on the ECB's forward guidance, while the dollar remains under pressure from soft economic data and expectations of rate cuts. So, in summary, US dollar is dropping and the euro is so far pretty okay. That means just based on news alone, it makes me think that the EUR USD is bearish, right? The EUR USD is bearish and the US dollar is, sorry, the EUR USD is bullish because the US dollars is bearish. Oh, okay. I see someone here with the name of Samantha Lee. I don't know if you happen to be my friend. I have a friend named Samantha Lee. I don't know if you guys are the same people. Yes. Hello, welcome to today's webinar. I didn't see you here last week. Okay, cool. So we're done with the news. I'm only going to touch on these two currency pairs because these are the two news that came out today. There are no other news that I saw today that should affect our trading. So like Canadian dollars or the GDP or Australian dollars, I didn't see any major news, therefore I didn't share anything major about that. Okay, so other than that, trading the markets with a live professional trader. Please save this if you are new here and have not saved this before. I know Jamilu, Cleon, Phoebe, you guys already have this. For the rest of you who are new here, like Dean. Hi, Dean. Samantha. Since euro is positively correlated with XAU, is it safe to assume that XAU is also bullish? I would say so, yes. It is safe to assume, but it is still, yeah, it's safe to assume that XAU USD is bullish, but we still need to combine other things like technical analysis. So, okay, so I personally don't use fundamental analysis, which is basically news trading that much. Reason being because news trading is very reactive when news just comes out. Okay, so when news just comes out, like you can see price spiking a lot and like moving in one direction a lot. But ultimately, I think for me personally, okay, this is my own personal trading strat style. My own trading style is I use a lot of technical analysis. So even if the news tells me one thing, I still need technical analysis to confirm it. So let's say EUR USD is bullish, right, based on the news. But if I go on the chart and technical analysis is showing me bearish, I immediately enter for a sell. Okay, so I don't take news into consideration that much. I take technical analysis into consideration even more. But it will be even better if news and technical analysis are both aligning. That will be even better because then your trades will be very high probability. Okay, so save this if you haven't already. We're going to be using this in a while. This is what we're going to be using as well, Fibonacci. So we're going to use retracement, expansion, projection, extension. For those who don't know what this is basically a style, a kind of technical analysis that we will be implementing in our trading, in my trading. Sorry. Okay. So lastly is another risk warning. Again, everything I'm sharing with you guys today is purely my own trading style. It's only educational and should not be taken as investment advice. Okay. Let me pull up my charts. Give me a sec. Cool. I already have EURUSD on. Okay. Deleting everything. We're gonna do EURUSD first because the news already showed us that it's supposed to be bullish. Okay, so news is saying bullish. Technical analysis, let's see what it's saying. Do you guys, can you guys let me know in the chat box, do you think price is going up or down? I need a little bit of interaction and a little bit of, I need you guys to communicate with me so that I know that we are both seeing the same thing. Okay, so on the daily chart, EURUSD, do you guys think it's on an uptrend or a downtrend? Thank you, Jamilu. Anyone else other than Jamilu, do you guys think it's an uptrend or downtrend? Okay, thank you, Dean. Thank you, Phoebe. Okay, so everyone has the same consensus. It's good. If everyone is saying the same thing, that means we are all going to catch the same thing. And then the mass market is going to decide. Okay, so the market moves when majority of the people move it together. One person cannot move the market. So the more people seeing the same thing, the better. Okay, so you are right. It is on an uptrend. How do we know it's on an uptrend? It's making higher highs and higher lows. Okay, that's how simple it is. I swear a 3-year-old will be able to identify it. That being said, my daughter is 2 years old. Next year, I'm gonna teach her how to identify swing highs and swing lows. Okay, so this is an uptrend. We're gonna go down to the smaller time frame. I don't want to trade on the daily because then my trade will last too long. I want to go like on a slightly lower time frame so that I can get into a trade today or maybe tomorrow. Okay, so anyone else see anything other than an uptrend? We should all still be seeing the same thing, right? Uptrend as well. Making higher lows and higher highs. For those who are new here and are confused, you must be wondering, okay, this part is making higher lows, but what about this part? It was making this higher low here, and then, sorry, let me delete that. It was making this higher low here, and then suddenly it breaks, and then some people will think it's a breakout, but it's not a breakout because it has not taken out this low yet, right? This part is still higher than this part. Okay, so the higher low, it's still valid and we are still on an uptrend. Okay, so 4 hours still an uptrend. Let me know in the chat box if you want me to go down on a lower time frame or are we good to chart on the 4 hours. I'm gonna do what you guys want. Right, I'm gonna do what you guys want. But if you guys want me to chart on the 4 hours, I can. If not, we can start charting on the lower time frame even. The difference between charting on a lower time frame and a higher time frame is getting a trade sooner than later. Okay? 4 hours and 1 hour is fine. Okay, cool. Then we'll just stick with 4 hours and 1 hour then. Okay, let me pull out lower time frame, please. Okay, we'll do lower time frame in a bit. I'm just going to use the 4 hours to mark out some levels. Sorry. Checklist. There you go. Okay. This is the checklist that I was talking about just now. I'm gonna put this in the corner here. I don't know if you guys can see it. Okay, I'm gonna put this in the corner so that we can still reference this. Okay, so the first thing we want to find is a channel. We are going to look for a channel. Price is moving in a very nice channel here. I know it's not very beautiful because this part has cut out. Do not worry. Price is never one zone. It is usually one. It's okay that it came out a bit, okay? Because price is never one straight line like that. It's usually a zone, okay? It's usually a zone. Okay, so then let's pull out this again. Where is that this? Okay, there you go. So trend line channel, we're gonna look for horizontal levels and then we're gonna look at chart patterns. I don't see any chart patterns. Do you guys see any chart patterns? I don't see a head and shoulder. I don't see a double top. I don't see a wedge. I don't see a triangle. I don't see any chart patterns at all. So there are no chart patterns. So we're going to look at horizontal levels in a while. Are there any natural moving averages? We'll look at that in a while. Any dive crosses, stochastics, correlation, reversals, and breakout. Okay, I guess we're done here. Okay, every time I chart, I will write a note of why I am doing something. Remember, I say this every time in all my webinars, trading is a very factual and logical game. If you are going to buy, you need to know why you are buying. If you are going to sell, you need to know. Okay, news is showing bullishness on EUR USD. Weakness on US dollar. Okay, so this is our reason to get in for a buy. Number 3, technical analysis is showing uptrend on daily and H4. Okay, so I am definitely going in for a buy. I now need to know where I'm going for a buy. This is when you pull out your levels. Okay, let me just pull out. I want to identify swing lows. Okay, so I want to identify swing lows and swing highs. I'm just gonna identify as many as I can and then we start deleting from there, okay? So we start eliminating from there. Let me see. It's very easy to identify swing highs and swing lows because it's basically just looking for the swing lows. I'm basically taking all the points from the swing lows. This swing high here is not very nice, right? It's kind of like cutting through everything, so I'm gonna leave that out. Okay, so I've got some of the areas. Okay, now that I know where my support resistance is, I now need to identify where I think price is going to go to. Okay, so to identify where price is going to go to, I am going to pull out, let me see. I'm gonna pull out Fibonacci. Yeah, it doesn't write here. I should update this checklist and write Fibonacci levels. Cool. I'm gonna pull out Fibonacci to identify which of all these levels that I have pulled out is the strongest level. So I've got, leaving this out. Actually, no, I'm just gonna leave it there and then we can start deleting from there. For those who don't know what I'm doing, you guys need to master Fibonacci. 1, 2, 3. Hold on. 1, 2, 3. Okay, cool. To know what I'm doing. Too far away. Just pulling out some Fibonacci levels, and then we'll talk about it in a while. Okay, cool. Okay. So what I've done is, sorry, you know what? I should probably explain what I'm doing. Okay, so when I'm pulling Fibonacci levels, what I'm doing is identifying the patterns that I see in the chart. So what I'm doing is I need to identify where I can do Fibonacci. I can do one here, I can do a retracement here. I can do a projection here. I can do a Fibonacci expansion. Not here, sorry. Here. I can do a Fibonacci retracement on this even bigger level. I can do a Fibonacci extension here as well. Okay, so for those who don't know what I'm talking about, I'm basically using Fibonacci. I cannot explain exactly what I'm doing because that's a topic. That's a 4-part topic, but I'm basically identifying Fibonacci levels to see which of the levels that I have outlined is the strongest, and then I'm gonna start deleting, okay, in a while. Give me a sec to pull out these levels. I already see a level lining up, to be honest. Yep. 1, 2, 3. Okay. Okay, cool. So I'm now going to delete things that are not relevant to us. This 23 point is not relevant to us. This is relevant to us. This is relevant to us. This is too far away. It's not relevant to us. $61.8 is not relevant to us. Okay. Two. Okay, I'm done. So based on what I'm seeing, this level is relevant. This level is relevant. I'm gonna delete everything so that it's not confusing. Then I'm gonna pull out this. Okay, so I think price is gonna pull back to one of this area based on Fibonacci. Okay, to one of this area, and then from there I can enter in on a buy. Right? So I can either enter in on a buy here, here, or here. I don't know where I'm gonna enter for a buy. That's why I now need to use other things to eliminate where I think price is going to pull out to and then enter for a buy. Give me a moment. So yeah. Okay, so now that I have my levels, how do I know where price is going to reverse from? The first thing I like to use is Ichimoku. Why do I like to use Ichimoku? Because Ichimoku works as support and resistance. Okay, so I'll teach you guys really quickly how to use Ichimoku. I need to delete stuff so that it's not. Okay. If the blue line is above the red, it means that it's bullish. If the red line is if the blue line is below the red, it means that it's bearish. So right now we can see that it is bullish because this blue and red line works as a moving average. Okay, so the moving average on Ichimoku is showing bullishness. The other thing I like about Ichimoku is that this cloud works as a form of support and resistance. Do you see this cloud here? That's why it's called Ichimoku cloud. So the thicker the cloud is, the stronger the support and resistance. So do you see how price came here? It could not break the cloud and then it reversed back. Okay, so the cloud works as a form of support and resistance. Okay, so because the cloud is only forming here, right? The cloud is only forming here. I do not think price is going to reach this bottom part here. I do not think price is going to reach this bottom part here. So I'm now going to delete this bottom part and I'm now going to focus on this two. So one of these two areas is going to be my entry. Okay, one of these two areas is going to be my entry. I now need to know which one is going to be my entry. So just now when I pull out the Fibonacci levels, both this level and this level actually had a lot of levels coming up. Okay, so I actually think it's going to be this one, but yeah. I'll tell you why in a while. I think it's going to be that one because yeah, it's most likely going to be this one. Okay. So I remember one of my webinars, one of you asked me if I actually use smart money to trade. So smart money is when institutional traders are like the big banks, the people with money, the big sharks move the market. Okay, so institutional traders know what you are thinking and they want to wipe you out. Why? Because in trading, trading is a zero-sum game. Okay, so for me to win $10, someone needs to lose $10. For someone to win, someone always has to lose. So if you put your entry here and you're going to put your stop loss here, the institutional traders or the banks wants to stop you out so that there is liquidity in the market and then price will continue in that direction so that you are out of the market and they have a chance of winning, right? Because someone needs to lose and someone needs so that someone else can win. Okay, so it's very important to identify where to get in because you want to avoid the institutional traders with people taking you up. So I don't think it's going to be here. I think it's going to be, give me a moment. Yeah, I think price is going to pull down here. I'll tell you why in a while. Okay, so based on institutional trading, which is ICT, inner circle trading method, it's a totally other style of trading. Okay, based on the inner circle trading method, price, every time I identify a swing high and price breaks here, okay, price tends to want to go back to this area. Okay, price tends to want to go back to this area where it has last broken the swing high. Okay, that is the rule for ICT trading. Okay, that's why when I see possibility number one or possibility number two, I think it's going to be number two because there was this swing high here and this swing low took out this swing high, breaking structure, and now price usually wants to come back here and fill in the gap. Okay, I'm combining a lot of different methods in my trading to make it very high probability. So based on ICT method, I think price is most likely going to bounce here. Okay, so it's called inducement, which okay, cool. I'm gonna get rid of that. That means I think that my entry is somewhere around here. Okay. My entry is here. My take profit will be here, the next swing high, the last swing high, and my stop loss will just be here. If I get into this trade, we're talking about somewhere along the line of, yeah, you know what? I'm quite confident this is where price is going to pull back to, right? Because of the structure of the charts. So based on ICT trading, right? When price breaks, price needs to come back and refill this order. And you must be wondering, okay, but why not this lower part? Because this part also broke, right? Because price already made this structure here. So now this is a new low. So price is most likely going to come down to this part rather than this part. Okay, so I am happy with this. I'm really happy with this. I'm going to stick with this. Okay, I'm going to stick with this. I actually have a sell entry now, by the way. I got in for a sell here. Here, yes. Somewhere around here. And then I plan to sell it to this area. Yeah, so, but I mean, do not get into that trade, okay? Please do your own analysis. I actually think price is going to pull down here. And then from here, then it moves back up. Okay, cool. So if this trade works out, we're talking about, okay, 1, 2, 3.5 trade setup, which is a very good trade setup, to be honest. If you have $100,000 account and you're risking 1%, you are making 3.5% in return. Okay. If you have $100,000 account, you're risking $1,000 to make $3,500. If you have a $1,000 account, you're risking $10 to make 300. Wait, yes, $10 to make $35. Okay, so your risk is based on your account size. It should never be more than 1%. So this is what I think is going to happen with EUR/USD. Okay, reason Ichimoku also showing that bullishness. Okay, so before this happens, price needs to pull back to this area first. And then once it pull back to here, I think it's going to bounce from here. I think it's going to bounce from here. I cannot confirm, but based on my analysis, I think this is what's going to happen. Okay, cool. I'm very happy with this, to be honest. I'm gonna leave this here. I'm going to list this here. I don't think this is going to happen today. This probably is going to start happening next week because one candle is 4 hours, right? So by the time it reaches here, it would need at least 1, 2, 3, 4, 5, 6, 7. This is definitely going to be next week. This is definitely going to be next week. Okay. It's going to take a lot of candles for it to get to this level, unless we see one big giant red candle and another big giant red candle. Okay, but I don't think that's going to happen. I think it's going to take a while before price gets here. But when it gets here, I'll be ready for my buy. In the current point, let's go down to the smaller time frame because Dean is asking for a smaller time frame to look for a entry for something else. Okay, so smaller time frame, I was hoping to see a sell, but I don't. It's still making higher highs. It is still making higher highs. Give me a sec, guys. Okay, price based on my analysis, price needs to get here, right? So if price needs to get here, it needs to drop. But I want to show you an analysis for a sell, but I don't see it because price is making higher highs. It is moving in an uptrend. There's no reason to enter for a sell. That being said, I am on a sell because of other reasons, not because of my usual trading style. Because on the 4 hours, right, I got in for a sell here because we are at a very strong resistance area. Okay, I'm gonna get rid of this. Sorry, I'm gonna take a picture of this so that when it works out, I have reference. If it works out or it doesn't work out. Okay, so I got in for a sell recently, somewhere along this line. I am still in my sell position, by the way. I've been there since Tuesday. It's already Thursday. The market is low. I got in sell because we were at a very strong resistance area. So 1, 2, 3, it didn't touch, but yeah, basically 4, 5, 6, 7, 8. Price came here 8 times, and every time it came, it reversed. Okay, so I entered for a sell because based on the past, every time price comes here, it reverses. I was planning to play like a very short move down. Okay, I was planning to play a short move down, maybe somewhere around here. But now that I've done the analysis and I see the possibility is here, I might just continue playing it until here. Okay, so yeah, that's why I entered for a sell despite price being on an uptrend and despite news showing it's an uptrend and despite everything, because price is at a very strong resistance. For it to break this resistance, it's going to need a lot of momentum. I don't think it's going to break this resistance right now. Okay, I think what's more likely going to happen is that it's going to retest one more time. Look, it already retested one more time. And then it's going to drop one more time. And then the next time, when it goes to that zone that this area here, from here, then the next time around, I think it's going to burst. Okay, I don't think it's going to burst now. There's a possibility it might burst now, but I think there's a chance that it might just come down one more time and then burst the next time. Okay, that's just my 2 cents. That's why I entered for the sell in this area. Okay, other than that, do you guys have any other pairs you want me to look at? That's the reason I'm in a sell for EUR/USD right now, and that's the reason I think the buy is coming when price reaches here, if it reaches here. Oh, by the way, my stop loss for my EUR/USD is somewhere along here. Let me show you my current trade right now. I got in 240, 14240. This is my exact entry. My stop loss is here, and I plan to sell it to here. Okay, so I'm looking at a 1 to 3.5 trade, right? I'm looking at a 1.3.5 trade, 1 to 3.5 trade. Okay. There is no reason to enter for this sell other than price being at a very strong resistance. That being said, I do need to let you guys know that. Okay, let's say you go to the ocean, right? And the wave is pushing towards the shore. If you swim against the wave, it's dangerous. Okay, it's risky. So it's the same thing. It's the same thing as my current trade. Price is going on an uptrend, but I entered for a sell here. Okay, I'm not saying that I'm definitely going to get stopped out or I'm going to be wrong or whatnot, but I'm saying that it's risky. That's why I don't recommend people going against trend, but I still went in against trend anyways because of the resistance here. Because for me, price action is the most important thing in trading. Price action is the priority in trading, and other things I see is price action with like support resistance is the priority in trading. Other things I see like Ichimoku and whatnot, blah, 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 those are secondary. Okay, so let's look at gold and requests from Dean. That USD trade is taking so long. I have not locked in any profit or any loss for the week. It's already Thursday. I have been in that trade since Tuesday. It's only because I'm looking at the 4 hours. If you want your trades to last, like you want to be in and out faster, you should be looking at the lower time frames. But because I'm looking at the 4 hours. Okay, so let's see what I can find for gold. Can you guys let me know in the chat box if gold is on an uptrend or on a downtrend to you guys? So that I know we're looking at the same thing. Yeah. Uptrend. I see answers coming in already. I honestly would stay out of gold at this current point of time. Ranging. Thank you. That was what I was going to say. Why I would stay out of gold. So if you focus on this part here, price is currently moving in a small little uptrend. It's kind of moving in an uptrend. But if you focus on this part here, right, it is still moving on a downtrend. Do you see that? From here, it could just reverse and continue the downtrend, or from here, it could continue up to continue this uptrend. So it's like the structure is not very clear because we have a mini uptrend. We have a mini uptrend here and a big downtrend here, a bigger downtrend here. And the worst part is it's not even a strong downtrend. Right? It is not even a strong downtrend. So when I see this, what do I do? Honestly, what about on a lower time frame? Oh, okay. If you're using on a lower time frame, you're just going to focus on this part, right? If you're looking at lower time frame, you're only going to focus on this part because let's say we go down the 1 hour right now. We go down the 1 hour. We're just going to focus on this part. It is technically an uptrend, right? But because on the 4 hours, we already saw that it's on a downtrend, you need to take note of support and resistance. You need to take note. Okay, so I'm going to mark this support resistance here. I'm going to mark this resistance here so that when you're doing your analysis on the lower time frame, you don't forget that there's a resistance here. Okay, so let's go down on the 1 hour. 1 hour is worse. There's a resistance here. Okay, based on ICT trading, right? Based on ICT trading, price is most likely going to reverse here. That's provided I don't see anything else. Nope. Based on ICT trading, price is most likely going to reverse here. Okay. So based on ICT trading, what's going to happen is price is going to be coming to this area. Retail traders are going to be putting their entry here. Okay. Retail traders are going to put their entry here for a sell. Why? Because there's resistance here, resistance here. This is a strong resistance. The big traders, the big fishes and the bankers and the whatnot, they want to wake you out. Do you guys notice that when you trade XAU USD especially, that you get waked up a lot? I don't know about you guys, but I used to get waked up a lot from trading XAU USD. When I say waked up, I mean that I'll put my entry here. I put my sell entry here. I put my stop loss here. And then I put my take profit here, for example. Okay. Price will usually do this. It comes here, hits my take profit, and then goes up, hits my stop loss, and then continues down to my take profit. Lost 2% trading goal if I managed to take it back this week. Okay. It's okay. Losses are normal. Yeah, so you shouldn't let the losses affect you because there's nobody, not even Warren Buffett, not even the best trader in the world has a 100% win rate. Losses is normal. The most important thing is that overall you are still winning. Okay, so based on ICT trading, the retail people will want to take you out. So therefore, you should put your entry here at the next swing high instead. Okay, so I am biased of getting in for a sell for gold, even though it's on an uptrend. Even though it's on an uptrend, I am biased to get in for sell for gold. Why? Because price is always moving in a zigzag pattern, right? So even though overall it's going up, technically, this parts here, it's going down. Okay, you technically can sell here. This is not my usual style of trading. I usually will tell you to go with the flow. I usually don't tell you to go against flow, but if we wait for price to pull back, if we wait for price to pull back and then only enter for the buy when it pulls back, we are not going to be trading this week. Big institution doing a lot of stop loss hunting on gold. Yes, they do. I experience it myself as well. There is a lot of stop hunts for gold. So put your entry at the higher zone. This zone here, this higher zone. The institutional traders know that you are going to put your entry here. So what you're going to do to avoid getting stop out is to put the higher zone here. But remember, putting in the higher zone, there is a possibility that you won't get into the trade. Okay, there's a possibility. Okay, so the reason why I am calling for a sell for gold, even though price is on an uptrend, is because I want to get in on a trade by this week. Okay, I want to get in on a trade by this week. So I'm going to play the pullback. And then I don't know where it's going to pull back to, but then it's going to pull back to somewhere. And then when it pulls back, the pullback is done, then I consider getting in for a buy. Okay. Usually what I will tell you guys is to wait for price to pull back and then wait for the buy. I know this problem is that you're waiting so much, you're not getting on any trades. It's just so boring. It is so boring. Oh my goodness. The whole of last week, right? So last week I ended the week at 4.5% profit. But my analysis, I did my analysis on Monday. I only got into my trade on Thursday. It's so crazy. I spent 4 days waiting for price to get to my entry. It's so boring. So then I asked myself, like, okay, why not I just play the pullback instead? Next time I will play the pullback. I will sell to my entry and then I will buy once it reaches my entry. But you need to take note, when you are playing pullback, it is riskier. Okay, it is riskier. So when I am playing the pullback, instead of risking 1%, I am going to risk 0.5% instead. I am going to risk lesser because I am going against trend. I am going against the wave. Therefore, it's going to be more difficult. And therefore, the risk of it hitting my stop loss will be higher. Can we apply Fib returns to check on pullbacks? Yes. I cannot confirm. Oh, very nice. So based on Fibonacci extension, price should nicely just reach here. And then that's where you can consider. Give me a sec. Give me a moment, guys. I'm trying to see more levels. Okay, nope, don't see anything else. 1, 2, 3, maybe this. Okay, I'm happy with the sell entry. 127.2% Fibonacci extension lining up exactly at the sell entry. 161.8 Fibonacci projection lining up exactly at our sell entry. Let me see if I can pull out more levels. Yep, 100% is also lining up nicely. in this area, this is an area I definitely would consider getting in for a sell. But remember, because I'm going against trend, I want to be cautious and I want to risk lesser. Okay, so now every time you trade, you need an entry. You need a stop loss and you need a take profit. Okay, so I already found my entry. Where am I going to put my stop loss? I'm going to put my stop loss right above this entry. Let me see if I see anything here. If you want, okay, then this will be too huge of a stop loss. Okay, so based on Fibonacci, based on institutional trading, ICT, this is where this zone here is going to be where the entry is, okay, for the sell. I hope this is today. I really want to get in on a trade. My EUR USD is so boring. Oh my goodness. This is why you should have a hobby if you are trading. Okay, this is the stop loss. And then I'm going to play the pullback. So where am I going to pull it back to? When price reaches this area here, I'm going to wait for a reversal pattern candlestick, okay? I need to see a reversal pattern candlestick. I guess this is a good one, yeah. I don't care whether it's a hanging man, shooting star, tweezer top, evening star. I need to see a reversal pattern candlestick happening here. That is a confirmation that price is going to reverse from this area, okay? That is confirmation that price is going to reverse from this area. I'm gonna get in. I now have my entry. I have my stop loss. I now need to find my take profit. Where am I gonna take profit to? Honestly, I think this swing low here should be good. Yeah. You want to be very conservative when you are going against trend. I could aim for here if I wanted to. I could aim for this part here, but we are going against trend, so you need to be very careful and very conservative. So being very conservative, I'm just going to play it to the next swing low, or I can play it here, this swing high here, which is still gives you quite decent profits, but it's going to be a very short and tight trade. Okay, so price to come here, rejection candle, and then here I enter, I either get out here or I get out here. Most likely I'm gonna aim for this. And then when that happens, we're talking about a 1 to 4% trade. 1 to 4 trade, depending where you get in within this box. Let's say you get in somewhere higher, it can go to 1 to 6. Okay, you guys, I have people asking me, oh, how do you do so many percent? There are months, there are weeks when I do 10% within the week profit. Okay, the reason why is because I'm always risking 1%. I'm always risking 1% to make a huge amount. Okay, so depending where I get in, my trade could make me 6%. 6%, 8%. If I'm being very conservative, it'll make me 4%. That's why last week I made 4.5% and I only took one trade the entire week. I only took one trade the entire week. I did my analysis on Monday and I got in on Thursday. It was so much waiting. It was so boring. That's why now I'm starting to play the pullbacks because I cannot just be waiting around. It's so boring. Okay, so that's why now I'm going against trend, which I don't usually do. It's a bit riskier, but yeah. Yeah, it's too boring. Okay, so if this works out, we're talking about 1 to 4, 1 to 5, 1 to 6%. And then if my EUR USD works out, we're talking about 1 to 2, 1 to 3. Okay, so if it works out, If I'm risking 1%, I'm going to make 5%. If it doesn't work out, I'm going to lose 1%. Do you guys know if you make 5%, if you make 8% within the month, you are basically professional level already, right? You are basically professional level. So there is no need to overtrade. There is no need to like force trades. There's no need to keep going. There's no need to scalp even, to be honest, because I day trade and I take one trade a week and it makes me such a high percentage. So there's no need to force so many trades a day. There's no need to sit in front of the computer every day. I am only doing it because I am bored. But realistically, there's no need to do it. Okay, so that's all I have for you guys today. I hope these trades work out. Reject here and then come down here or here. Okay, I hope these trades work out. If it doesn't, I lose 1%. If it works out, I make a lot of percents. Okay, thank you. Coach, you're a really excellent trainer and teacher. Your explanation is so clear as water. Okay, thank you so much, guys. I will see you guys next week. Thank you, Phoebe. Thank you, Jamilu. Thank you, Dean, Cleon, Lewis, Samantha, Brian, Johnson, James, Muhammad. I will catch you guys next week. I hope this works out. If it doesn't work out, you should only be losing 1%, right? You should only be losing 1%. And please do not overtrade. Please do not keep staring at the charts. There's no need. Okay, if you don't over leverage, your trades should not affect you. If you put $1,000 in your account and you're risking $500, obviously the trade is going to affect you because you are risking 50% of your entire account, right? That's why I know people who trade and they're constantly looking at the charts, and I'm like, why are you constantly looking at the charts? Why are you so nervous, right? If you're risking 1%, there's no need for you to be nervous at all because it shouldn't even feel like anything. 1% is nothing, right? So don't over leverage. Risk management is important. I will see you guys next week. Okay, bye guys. Take care. How do I turn this off? I have this problem every week. Oh my goodness, how do I turn this off? Okay, bye guys.